Hi traders, you're welcome to visit our webinar, our special webinar, which is dedicated to a historical event. A Federal Reserve has hiked the interest rate in United States last week. And today we will talk about how to benefit on that. We will talk about the current situation on the foreign exchange market. We'll talk about the situation on the financial markets as well. And we will look ahead to the year 2017. We'll try to understand how can we benefit on that. We'll try to understand how to make money on that event after Federal Reserve made the historical move when it made the rate hike. As you all know, as you most probably the most part of you know, that last week we had an event for the rate hike of the Federal Reserve, and we'll try to understand what does it mean for us. We'll try to understand and to analyze how the markets have reacted on that and what are possible future forecasts for all of the markets. And today we will talk about, first of all, expectations and market reaction from that event, which took part last week. We will talk about fundamental analysis on current situation on the markets. We will talk about the trends in US dollar. We will talk about the movements on where is it heading, I mean US dollar in general. And we'll try to understand how to make the benefit on that. We will also talk today about the targets, about possible targets, where can US dollar trend go in 2017. We will make technical analysis on several assets for mid and long term, and we'll try to understand the targets. Where are we heading? And that could help us to determine the trends in the upcoming weeks and months. And at the end of the day, we'll try to understand how to make money on that. Plus, we will talk also about one interesting trading strategy. It's an intraday strategy, and we'll try to understand how to use one of technical indicators to determine entry levels and to understand where can you buy or sell and where can you exit the markets, I mean take profit. So those are three main topics for today, and you're welcome to sit back and enjoy this webinar with Currency House. So getting started, we have to understand the current situation in worldwide markets. We have to understand what is happening in the central banks, what is happening with the interest rates all over the world. And now I'm going to show you one interesting table. You can see all of the central banks' interest rates worldwide, I mean major economies. As you can see from this table, the only country worldwide is hiking the rates, the interest rates, is Federal Reserve, is United States. As you can see from this table, all of the last movements from all of the other countries, from all of the other central banks, are headed to downside the pressure on the economy, and thus they are trying to decrease the cost of funds, decrease the current interest rates. So you understand that every time when economy is going up, every time when a central bank as a regulator predicts strong economic growth, they always hike the rate. Why do they do that? There are several reasons, and one of them is to avoid overheating of the economy, is to avoid the too much rising of the prices, too much inflation, which is not good for any economy. And the main idea is to avoid bubbles. I'm sure that you all remember the year 2008 when we had a worldwide financial crisis. And one of the reasons because there were lots of bubbles on the financial markets. So in order to avoid that situations, in order to have much more stable growth of the economy, all of the central banks are raising the interest rate, the basic rate for all of the commercial banks, just to avoid such a situation and to help the economy growth. But on the other hand, if we see the downside movement on the economy, if we see that the economy struggles and doesn't have any growth, all of the central banks are always trying to decrease the pressure and to give the economy fresh blood. So they are decreasing the interest rate, which is causing cheaper, lower prices for the funds to commercial banks, to companies, to manufacturers, and to usual people at the end of the day. So every time when the economy is going down, the central bank is not hiking the rates, it's going vice versa. So if you can see from this table, all of the countries all over the world, I mean major economies, they are decreasing the rates. And the only country which is hiking is US. United States economy showed the very strong figures last month, and that is one of the reasons why Federal Reserve made such a move. And I should say that this rate hike was already priced in by the expectations of the traders, and lots of people predicted that hike. But the only question was about the next movements. What do we have to expect from Federal Reserve in the next upcoming months, and especially in the year 2017? And that is why lots of traders were looking at the press conference from Janet Yellen, who is the chairwoman of the Federal Reserve, and lots of people were trying to understand what are the next moves from the major central bank, from the regulator of one of the biggest economy in the world, in the United States. So what they heard, what we seen at that press conference was a strong signal to all of the markets that Federal Reserve is going to hike rates in the year 2017 3 more times. At least 3 times, because they see the pace of the economy is very good, the momentum is high, and lots of the indicators are showing that economy is healthy, economy is growing, and that makes them to have such a strong prediction. So lots of people predicted a pullback in US dollar trend just right after the rate hike. And the reason why is very simple. There is a major rule on the markets which says buy rumors, sell facts. It means that when lots of people were talking about possible Federal Reserve rate hike in the months and weeks before it happened, we could see the strong trend in US dollar, but as the predictions showed that the economy is going to grow more in the year 2017, so the Federal Reserve made a strong signal to all of the markets about the possible 3 rate hikes in the next year. So that triggered a continuation of the trend in US dollar, and we have seen lots of major currencies depreciated. So it means that US dollar showed a very strong trend. Now I would like to switch to our platform, and I want to show you a couple of charts. I want to show you a couple of long-term charts, because you understand that if you want to find an answer to your questions about the future, we have to look at the history first. So I want to show you, first of all, we have switched to our platform, and now we can see here a long-term weekly chart of gold. Let's try to understand what is gold. Gold has been always not just a commodity, not just a precision metal. It's been always a safe haven instrument, a financial instrument. And every time when investors are afraid of something happening on the markets, when they are not confident in the economy worldwide, they always buy gold just to get into the safe haven and to save their funds. So as you can see from this history, from this chart, take a look at this year. This is the year 2008, and I'm sure that most of you remember the financial crisis worldwide, and you can just take a look at the strong, very strong trend started from 2008, and one of the main reasons of that growth in price of gold is just because lots of investors were afraid to invest money in some risky actives. So they have chosen the safe haven asset, and all of them put their money into savings, and one of the best instruments to save is gold. So gold is always an indicator for the health of worldwide economy. If you can take a look here, this let me close it. Now we can see the downside trend of the gold price. And if you take a look at these dates, at this time, this period of time is exactly the year 2016. We can see here that this trend has been accelerating, and all of the price movements are going down. So it means that lots of investors, especially big institutional investors, they are selling gold these days, these months. And one of the reasons why, because they see that US economy as the leader in the economies worldwide is showing good results, is showing strong growth. So everyone is looking into the opportunity to get their money working and giving more profits than gold can give. So that is one of the fundamental reasons why, one of the main reasons why we see the downside movement of the price of gold. Technically, well, let me try to explain you what do we have here. First of all, this is a top channel. This is the channel, the top side of the channel from this downside movement. This green line is a simple moving average. The period of this simple moving average is 89. I use this period because it's one of the Fibonacci numbers, and it's always showing good, stable, and efficient results. So one of the strongest indicators, if we take a look at this picture technically, is that the price is below. You can see that the price of gold has broken the simple moving average, and now we can see it is below the moving average, so it always indicates a strong trend. What else do we see here? This yellow line, we got actually two of them. This is a downside channel. The trend which we observed from the year 2012 and up to May of 2015. So it's a rather long-term movement, and both of that yellow lines are showing a range, a channel. We call it a channel. So technically, after such a trend has occurred, we have to expect the price to test the bottom line of this channel. And the nearest target for the price of gold is this green line. Why? Because it is the low. You can see here that this low is the nearest target for the price of gold to reach. If we take a look at the numbers, we can see that it's almost 1,000 pips to go more. 1,000 pips, what does it mean? All of you know that with a $100 trade, with a one mini lot, which is 0.1 of a standard lot, with 1,000 pips of profit, you can get $1,000. It means that $100 traded, $1,000 of the profit. I'm sure that it's a huge profit. So, and I would say that it is just the nearest target. It's just the most probable in the upcoming weeks to test it. And if you can take a look at the bigger picture, I wanted to show you this red line on the downside. This red line has been a support for a long time ago. From the year 2003, you can see that gold was going up from that time, and the red line was always support for it. So the next target for gold, the medium term target for gold, is the cross of the red line and yellow line. If we can take a look, it's probably would happen in March of the 2017. So it's a bit above $900 per ounce of gold. And if you can take a look at the current price, you will see that it's more than 2,000 pips to go more. So it's a huge target, and we can make huge profits on the further movement of gold. Going next, I would like to show you one interesting asset is the Swiss franc. This currency pair is US dollar comparing to Swiss franc, and fundamentally, you know that there are lots of banks in Switzerland, and lots of people are holding their savings in that country. So the Swiss franc has been always safe haven asset as well. And here is also weekly chart, and you can see a stable trend of the US dollar, and we can see that US dollar is going up against the Swiss franc, not so fast, with not so many price movements, because you know that the Swiss franc is one of the most stable currencies. So again, talking about the targets, we can see that more than 300 pips to, more than 600 pips to go, just to go to the upper range of the channel, of this blue channel. We can see that indicators are not showing any divergences. We can see that this price is not overbought, so it means that we have enough room to go on the upside, and this is a good sign that the trend will continue. Oh, I forgot to tell you that USD Swissy has been always a leading indicator. Lots of people are watching this currency pair just to understand where the US dollar will go. Next is a very interesting pair, is the US dollar comparing to Japanese yen. Again, the same time frame for this chart, and we see the weekly chart here. But first of all, I would try to explain to you what is Japanese yen. Japanese yen in the markets has been always an indicator of the risk appetite of the investors. Why? Because fundamentally Japanese economy is always dependent on the export. And you understand that one of the main markets for Japanese companies is US market, United States market. So it's been always good for Japanese companies, for Japanese government and Japanese people at the end of the day to push their currency into lower prices, comparing especially to US dollar. And the reason why is just because they want to compete. They want to get their goods to be cheaper than the prices of the competitors. So it's very good for them to keep the Japanese yen at the lower side. And if we get back to the table that I showed you, there was one more event recently. You can see the Bank of Japan is decreasing, is lowering the interest rate. So the main idea is that it is very cheap to take a loan in Japan and to put that funds into the US economy. Why? Because the outcome, the profits, is much more interesting, and the trend shows that it is rising comparing to Bank of Japan. So it's very easy to imagine that you're a big fish on the market. Imagine that you're money management of a huge hedge fund. What you do? You just go to Japan, take a loan with a very cheap price, and you put that money into US economy, which is showing much more signs of the growth. So the outcome, the profit of that investment will be much better than you have to pay for the loan in Japan. But in order to do that, you have to convert Japanese yen into US dollar. Because you take a loan in Japan, no one in Japan will give you a loan in US dollars. You will take it in Japanese yen. So you have to convert it before you buy any asset in US economy. So that is a huge driver. We observe a huge speculative flows coming from Japanese currencies into other currencies. And as you can see from this table, one of the most attractive assets, one of the most attractive currencies is US dollar. So coming back to the chart, this is a very long-term chart. You can see here even year 1994. Take a look at this yellow line. It's a median. This line divides exactly all of the charts on two sides. So one is above this line, and here we can see the prices below this line. Now let's try to analyze what we have here, and especially we can see the year 2016, and we see the acceleration of the uptrend of this currency pair. It started somewhere in summer, but it accelerated in autumn. And one of the triggers was the election of Mr. Trump in the United States. The reason why is just because, well, first of all, historically, every time Republicans come to the power in US, it means a strong dollar. And vice versa with the Democratic Party, because every time they get into the power, every time they get to manage the economy, the US dollar going down. And as you can see, they have power now. If you take a look at all of the people in the White House, you will understand that all of them are coming from business. So they are huge, strong, corporative managers. And lots of people call Mr. Trump as a dealer maker. So lots of people, lots of investors are confident that he will put on business track all of the economy, all of the international relationship will be put on business track just to make money. So that is the reason why, that is the second reason why US dollar accelerated its growth, and especially against Japanese yen. So coming back to technical analysis, what do we see here? We see a strong uptrend, and the room to go is rather high. Well, first of all, let's check. Here is December. No, sorry, let's get back. All right, September. Here we go. September 2016. The price was just a bit above 100 yens per US dollar, and now what we see is almost 700 pips above just in few months. So yen, I should say, has been always like that. When it goes up, when the dollar yen goes up, it goes very fast. So first of all, in the long term, we predict that the price will reach this yellow line and will try to consolidate over there. So possible levels to come more is 2,000 pips. Yeah, 2,000 pips more. So the nearest target is about 124 Japanese yen per 1 US dollar, and I'm sure that the price will reach it very, very soon. And so as you can see from this chart, there is much more room to go, because once the price will get into this blue channel, they will try, all of the traders will try to test the upper range of this blue channel. And you can see here that the prices are very, very high. So we have not just enough, we have plenty of room to go further in this trend. So everything indicates a very strong trend. Let's try to analyze euro-US dollar, which is a very important pair as well, just because you know that there is a basket of currencies measured comparing to US dollar, which is called US dollar index. It has 6 major currency pairs, and euro has 60% of that in the volume, just because of the volume of trading is very huge. So again, the ECB, the European Central Bank, is not going to increase the rates, and the situation is very likely like with the other major currencies. So we can see here a strong downtrend. And again, we have a yellow median, which is a line which divides all of the prices on two parts. One part is above this line, and the second part is below. And we can see here that during last 2 weeks, the price has a clear closing, and we broke this line on the downside. So what do we expect from the price? Of course, the downside movement. You can see here the green channel, the bottom line of this green channel is going to be the main target for the price to go. And I would say that the first and the nearest target is the parity, when US dollar will cost the same price as euro. So it's 1.000 and so on. And it's just the first, and it's just psychological target. We don't see any technical resistance here. And I would mention the range of the euro-US dollar has to be something below this blue line. Historically, we see the lows just a bit above 0.8 US dollar per 1 euro. So again, comparing to the other currencies, the euro-US dollar has a huge volume of trading, and the movement of 500 pips is a huge movement for the US dollar index. So and and we can see here that we got more than 700 pips to go. So those are targets for the medium term. If we talk about time, well, we should think about April, June to reach this target. And the parity, you can see that it's very close. The parity is just in January. I'm sure that they will break before the end of January. I mean the parity of US dollar comparing to euro. So all of those charts show us strong trends in US dollar recently. Coming back, I would say the strong trend in gold on the downside. You can see that we went more than 2,000 pips. We can see a strong trend in US dollar comparing to Swissy, which is a stable currency, but still it's going down comparing to US dollar. We can see a huge and very fast trend in US dollar comparing to Japanese yen, which showed us weakness, especially in the last weeks. And we can see a downside trend of the euro, which is the most traded pair and has the maximum volume of trades. So as we have determined the trends, we need to understand where can we enter into the markets? What are the levels which are good for the money management, which are good for the risk management? And we have to understand that what are the levels for us to buy US dollar. You know that there is a simple rule in the markets, and every investor, every trader wants to buy lows and to sell highs. So my recommendation is for you to wait for pullbacks of all of these assets and to buy US dollar on dips. And how to do that, I will show you a simple strategy, which is an intraday strategy when you trade inside one day and do not hold your position more than 2 or 3 days, and you don't have to think about larger movements. This strategy is very good for small accounts. When you cannot afford yourself to wait months or weeks of time for the price to go in your direction, when you cannot afford yourself to stay in the opposite direction of the market. So the intraday strategy was invented especially for small accounts and is very good to make daily profits. So let's switch to another workspace, and we will start with dollar Japanese yen as one of the most attractive pairs to trade nowadays. What do we have here? It's an hourly chart. It means that one candle is 1 hour. This indicator is Bollinger Bands. Let me just take it off and I will try to explain you about this Bollinger Band. How to add it? You search for the Bollinger, you can see Bollinger Bands, and I recommend you to use the default settings with this indicator. So the period is 20. What is period? Is the period of the simple moving average. And the deviation has to be 2. That's what I recommend to you. I don't want you to get tired with the mathematics and understanding how this indicator works exactly in the sense of calculation, the deviations and all of that stuff. If you want, you can try to Google. You'll find a lot of information about this indicator. It's been very popular, and one of the main advantages is that it is very simple. So you set up the indicator, and what do you see here? The center line is just the simple moving average with a period of 20, and you got 2 more lines. The upside of the range and the downside. It's very, very easy to use. What else this indicator can show you is the volatility. Once the distance between lines, the upper line and the down side of the range, when this distance is low, it means that we have low volatility. In this case, for example, we have a high volatility in this situation when these lines are going in opposite directions. So this indicator helps you to determine the volatility. And if we have agreed that the trend of the US dollar, Japanese yen, we have determined it on the mid-term, the large term charts, so definitely we don't want to sell this pair because we don't want to stand against the trend. What do we want is to get with the trend, to make profits with all of the traders all over the world. We don't want losses, we want profits. So the best strategy is for you to wait until the price pulls back and you buy this asset. You can see I have indicated a couple of signals which Bollinger Bands is showing us. So once the price gets on the downside range, when the price touches the bottom line, it's a good signal to buy this asset because we see that the uptrend is very, very strong in this pair. So if we can calculate possible profits from just recently, you can see this signal to buy and you take profit here, so it gives you more than 200 pips in several hours, not more than 2 days. This green line is a special event, is the rate hike that we observed in the press conference. So you can see that the price just skyrocketed for this pair because of the expectations of more rate hikes, of more difference between interest rate in US and Japan. So this press conference triggered a huge movement and a huge continuation of the trend. So the first question is to understand where to buy, and I showed you several examples. When the price pulls back, it's going down, and the price reverses because we see a strong uptrend. Okay, and the second question is to understand what is the level of taking profit. Bollinger Bands has a very, very good signal which says, I will give you just a couple of examples. First, you can see here that the blue candle, which is the rising candle, it closed above the upper line of the Bollinger Bands. This is a strong signal that we will see in the nearest future. We will see the price higher than this level. You can see here the same situation. The price of 1 hour closed, the candle has a closing above the upper line, so we see the further movement. And at the other side, when we see a candle like this, for example, when the shadow just touches the upper side of the range of the indicator and the closing price is inside the range, so this is a good signal to take profit because there is a high probability of the price to pull back. We can see the same situation here. We can see it here as well. So this indicator works good in a trend. It allows you to calculate the exact levels of where to enter into the markets, where to buy this asset according to the trend, to the uptrend, and it's showing you also the levels of where can you take profits. So this is very easy. Same pairs, same indicator for different pairs. Quickly, because we're running out of time and I don't want you to get tired, is the Euro US dollar hourly chart. The same situation here. Strong sell signal. By the way, there it was the press conference of the ECB and the ECB rate decision, Euro Central Bank. So it's a strong sell signal. Plus, fundamentals are also talking about the downtrend. We can see a sell signal here. It was the rate decision of the US Federal Reserve. And we saw a couple of confirmations that the trend is going to continue because the price closed below the range, below the downside line. So we definitely can hold more and take profit somewhere here or here and wait for a pullback to re-enter into this position. We see that a pullback occurred and we can resell, we can re-enter into the markets, we can sell this asset once again. So that's how it works. And one more quickly example about the Bollinger Bands is pound yen. Very interesting asset. We will talk about this asset in the upcoming webinar, but you can see the same story. Once the price pulls back, you can just buy it. You re-enter into the same trend that we have. And in order to determine the take profit, you have to watch closely the closing price of the asset. When you see it above the upper line, you should hold it because you can take more profits. So this is a very simple strategy, very easy, and this indicator doesn't have any requirement for you to know a lot about the markets. You have just to follow exactly the closing prices, to watch them closely, and to enter into the markets. So that's it for technical analysis for today. What I wanted to talk to you is that you're welcome to make deposits with Currency House. You're welcome to trade with us and have all of the benefits that we have. Just to remind you that we have strong support from all of our clients. We have educational support, we have signals support, and one of the benefits that we can give you in the upcoming 24 hours is an option for you to choose. You can choose 100% bonus. It means that you deposit $250 US and you get $500 US at your trading account. So that will allow you to have a buffer, that will allow you to have an equity bump, and you can make more profits at the end of the day. You can trade more assets. And the other option that you can choose is that you can get our Master Apprenticeship course, which contains 20 hours of video lessons, which are very deep knowledge on the markets, and you can get it free of charge just in the next 24 hours. So, good people, good traders. There is one more thing I wanted to remind you is about our trading signals. All of the depositors, $500 plus, can get free trading signals on a daily basis. So all you need is just to follow that signals to make money. The quantity of signals depends on the markets. You understand that markets are showing different volatility, different opportunities, not every day the same situation. So but definitely they work, definitely they get profits, and you can get also this benefit. One more thing is that for the depositors for $1,000 and above, we can negotiate personal conditions, we can negotiate personal benefits for you, and one of them is personal coaching sessions. Is a huge tool for you to determine your personal strategy, your personal trading tools, your personal targets and goals that you want to achieve and want to make money on the Forex market. So all of you are welcome to contact me. You can contact me directly in case if you have any questions about this webinar, in case if you have any questions about possible future webinar. maybe you want to understand something that you cannot realize, or maybe you need an assistance for some topics. So feel free to email me at this address you see on your screens. Feel free to ask me any questions you might have. And in case if you'll email me in the one upcoming hour, I will make sure that you will get all of the benefits that I told you about. Those are special benefits for all of the attendees of this webinar today. And feel free to ask me any question. Let the profit be with you guys, and I'm sure that we'll make lots of profits in the upcoming year. I wish you to have a good night, and cheers.